Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day, Caroline Hyde, Taylor Riggs, Katie Greifeld counting you down to the closing bell. Here to take us beyond that bell is a global simulcast. Tim Stenovec, Kriti Gupta in the house for Carol Massar. We are bringing together, as we always do, TV, radio, YouTube, to dissect what has been a day of headwinds, whether it be geopolitical ones, whether it be, of course, us anticipating data, anticipating earnings. But overall, we were pretty flat, dare we say it.
Yeah, pretty flat, but coming off just a monster rally that we saw in July. And I think the big question that a lot of investors have moving forward is, was this a bear market rally? Is this a bear market rally? And Lisa Shallett, Chief Investment Officer for Wealth Management at Morgan Stanley, we just spoke to her. The title of her note, Mission Accomplished, Not. She thinks this is a bear market rally, and she said there's a lot of unknowns, too many to say that we've already seen the bottom.
Well, Tim, you know what gets me kind of confused, I would say, about today's trading story is that, yes, we see a little bit of a pullback from those monster gains of last week, but take a look at the cross-asset action here. You have this massive bid into treasuries, 5 basis points lower into yields, and a weaker dollar. We haven't seen that in a while, where you have a weaker dollar and you don't have a bid into the stock market. I wonder how many of those cross-asset correlations are repricing.
Certainly see maybe the lack of correlation within the bond market today as well. When you talk about some of the dollar weakness, Katie, and then you see full faith and credit really rallying, price higher, yields lower and significantly lower. If you go out on 20, 30 years, you're down now by about 10, 11 basis points on the day.
And yet, if you look at the 2-year, this is interesting as we sort of see some of the Fed speak push back to this pivot that the market has run with. 2-year yield relatively unchanged.
The bells, they ring. The S&P 500, it is lower, and we talk about those cross correlations. Overall, it's an equity downdraft. We have seen the S&P 500 trading lower ever since we really got that confirmation that Nancy Pelosi is indeed going to Taiwan. Geopolitical risk seems to be front and center at the moment. S&P 500 off by 12 points. Let's call it 0.3% lower. We're seeing the Nasdaq off by 0.2%. That's 22 points to the downside. And the Dow Jones Industrial Average taking a breather too. We're off by 0.1%, almost 46 points lower. We did see volumes elevated on the S&P and the Dow. The Russell 2000 was a large part your outperformer, but also finishing the day just ever so slightly in the red, just by about 1 or 2 points, though, Tim.
Yeah, if we take a deeper look in the S&P 500, we saw 221 stocks advance today. We saw 280 of those stocks decline. So almost split halfway down the middle when it comes to gainers and decliners in the S&P.
Tim, you really see that on a sector level as well when you talk about an even split. I think for the first time in a while, some of the best performers are green and the worst performers are red on the screen. For a radio audience, we'll make sure to get a photo of this for you. Firmly in the green, I should say, household products, food and beverage, and some semiconductor equipment as well, along with food and staples. When you think about some of those classic, maybe inflationary hedges up about 0.7% or more. Down to the bottom of the screen, Kriti, you go down, you get some of the financials, the dividend players, real estate as well, as you are seeing sort of the further inversion of the yield curve. So some of those losers are off by about 1% or so.
Absolutely. Well, there were quite a few gainers, I would say, within the market. Let's kick it off here with Boeing, because this, of course, is a heavyweight in the Dow, dare I say the Dow, but also a heavyweight in the S&P 500 as well. BA is your ticker for our radio audience. Shares were up over 6%. A double whammy here to the upside. A new contract offer made to some of those defense workers. Remember, they were striking. It looks like those extended talks have been pushed back to Wednesday. And on top of that, perhaps a little regulatory milestone here for Boeing as well. Their 787 Dreamliner. It looks like the way they actually evaluate some of the intricacies of the design, well, that has been approved by U.S. regulators and potentially will put it on path back for deliveries that have been on hold since late 2020. You also have PepsiCo here. PEP is your ticker for our radio audience, up 1% on the day. This comes after they are going to pay $550 million and get a stake in fitness energy drink maker Celsius as part of a long-term strategic distribution agreement. And Tim, I'm going to end here with Target. TGT is your ticker, up 1.3%, upgraded to overweight from equal weight over at Wells Fargo. And get this, he's saying that the sell-off provides the opportunity to pick up a proven share gainer into an underappreciated earnings recovery at, get this, the right price.
All right. Well, I like what I like what he did there. There it is. Let's talk about decliners. You got the gainers, Creedy. I want to start with Apple. Shares finishing the day lower by 0.6% after we learned today that Apple was tapping the high-grade bond market with a $5.5 billion sale in 4 parts. Now, according to a person familiar with the matter who asked not to be identified because the details are private, proceeds from this sale are earmarked for general corporate purposes, including the financing of share buybacks and dividends. Also checking in on Royal Caribbean, down 7 let's go ahead and round that up to 8.8%, 7.6%. Shares falling after the company launched a private offering for as much as $900 million in senior convertible notes to be used to buy back existing debt. We also saw shares of other cruise lines fall. Carnival finished the day down by 1.5%. It does come a few days after Carnival closed on an underwritten public stock offering that raised $1 billion to be used for a variety of purposes, including 2023 debt maturities.
Convertibles, new stock, supply side issues when it comes to some of your laggards on the data. Meanwhile, we look at the supply side issues that are currently within the commodity market. We're actually seeing more of a demand story coming from oil. I'm looking at WTI crude falling almost 5%. We saw the data come in from China, the manufacturing data slower than expected, and therefore we worry about global demand. We worry about the US manufacturing data coming in and showing some slowing as well. WTI crude at $93, Brent crude only just shy of $100 overall. But we've actually seen some inflationary pressures dial back. I loved how really just before the close we saw Taylor shining light on what gasoline prices are like at the pump at the moment, and they're significantly lower than your $5 a gallon that we were suddenly starting to get used to. I'm looking at foreign exchange, and this is a dollar weaker story on the back of perhaps that slowing data in manufacturing, and maybe we dial back what the Federal Reserve will indeed do. We've had 4 straight days of gains in the Japanese yen. It is stronger and strengthening versus the US dollar. The 4 straight days, the longest winning streak we've seen since February. Because, of course, the winning trade has been to be short the yen. We're seeing a little bit of a dial back of that, 1.2% strengthening. British pound is also strengthening to the tune of 0.7%. That as we all await the Bank of England and what they do in terms of a 50 basis point hike potentially as soon as Thursday. And therefore, we're seeing gilts getting a bid. We're seeing 12 basis points lower, actually on the long end, the 30-year. But is that because we see maybe a slowing of the UK economy and then again a future that signals cuts? We're seeing overall Italian yields, Greek yields, European also get bid today.
Yeah, definitely a big bid into government bonds. You saw that in the U.S. yield curve as well. If you look at some of the yield movement, as you can see, I mean, it really went down the curve there, just that bid for bonds. But like I pointed out, the 2-year yield basically unchanged, maybe as some of these Fed officials come out and push back against the idea that the Fed is going to slow down its rate hike cycle too quickly. But in any case, you did see a big bid into bonds. I guess people would still like to buy treasuries, even though you could get a 40-year Apple bond pretty soon.
All right. Well, from bonds to earnings, because they are still coming out. Let's look at ticker CAR, Avis Budget. Second quarter adjusted earnings per share coming in above estimates. We got shares of Avis Budget Group higher by close to 5% in the after hours right now. Revenue for the Americas came in just slightly below estimates at $2.57 billion, below estimates of $2.63 billion. Adjusted EBITDA of $1.21 billion, Caroline, versus estimates of $949.8 million.
Meanwhile, we also get Pinterest, your digital scrapbook, your higher users than Twitter, I might add. Second quarter monthly active users, 433 million versus a 429 million expectation. So a beat in terms of your monthly active users. You know, adjusted EBITDA coming in at 92 million. That is shy, though, of expectations. We're getting a rather concerning number for some, but let's not read too much into it. $666 million, 666. But we are doing a revenue of 666 million for the second quarter. That is just ahead of market expectations. Earnings per share, 11 cents, though. That is on an adjusted basis, shorter than what the expectation was. We're seeing third quarter revenue guidance growing middle single digits year on year. So still a path of growth, it seems, for Pinterest. And we're rallying almost 7% after hours, Taylor.
We get some of those numbers from Pinterest, Caroline, as we take a look at some other sectors as well. Activision, Blizzard as well, coming out with some really interesting comments about how they are looking to actually grow their headcount, their developer headcount, I believe it was about by 25% year over year, citing even though slowdown from other companies. And again, we sort of get the horse race of their numbers. Activision Blizzard's second quarter adjusted revenue, $1.64 billion. Again, just slightly ahead of expectations of $1.6 billion. And the bottom line, again, maybe just right here on the nose, 47 cents versus estimates of 48 cents. And of course, in the commentary saying that they do indeed look forward to the $95 a share buyout of Microsoft, that takeover that is still pending, hoping that that gets completed soon.
Yeah, and Taylor, I think what's crucial here is that Microsoft actually warned, I want to say a couple weeks ago, about perhaps pausing some of their hiring as well. So to see Activision, which will soon be a part of Microsoft, say, hold on a second, we're actually going to expand our headcount is crucial. I wonder how much of that is going to be something you see in Pinterest as well, because we did hear from Alphabet that even the social media, their ad distribution, well, it's getting crunched.
All right. Well, a lot for us to digest and pick through when it comes to these earnings reports. We are not done. We've got more coming throughout the week. And then, of course, those JOLTS numbers tomorrow. So it all continues. But that is going to do it for our cross-platform coverage of the market close here on Bloomberg Television, Radio, and YouTube. We'll be back tomorrow, same time, same place.